Hey everyone, George here. So if you're a home builder, developer, or manufactured home producer, this video can literally save you thousands of dollars per build, but you only have 7 months left to act. There's a federal tax credit worth up to $5,000 per home build, but the deadline is June 30, 2026. If you miss that deadline, the credit's gone entirely. Today I'm going to break down who qualifies, how much the credit is, and the biggest mistake I see builders make that costs them a lot. So without further ado, let's get started. So what we're talking about today is the energy efficient home builder credit. It's section 45L of the Internal Revenue Code. And the credit applies to single family homes, multifamily buildings, and manufactured homes as well. And here's the thing, this is a tax credit, so a dollar for dollar reduction in your taxes, not a tax deduction. It is way more valuable than a tax deduction itself. Depending on the type of home and certifications, the credit ranges from $500 up to $5,000 per unit. So here's the deal and why I'm talking about this now. So the credit expires for homes acquired after June 30 of 2026. That's not when construction has to start, or that's not when you apply. That's when the home must be acquired by. So if the home isn't sold or leased by that date, you basically miss the credit. So who can claim the credit? So the nice thing about this for contractors is that the credit belongs to builders or producers, not the buyers. And in order to qualify, your business must either construct or substantially reconstruct the home. You must own the home and have tax bases during construction. And the home must be purchased or leased by an individual for personal use no later than June 30 of 2026. And an important detail here is that if you hire a contractor or sub to do, effectively the whole work, you still can get the credit as long as your business owns the property during construction. But unfortunately, if you keep the home for yourself, you don't get the credit. So what counts as an energy efficient home? So not every new home qualifies automatically. A qualified energy efficient home must be located in the US, be purchased or leased for use as a residence, and meet specific energy efficient standards. This usually means an Energy Star certification, or in some cases a ZERH certification, a Zero Energy Ready Home certification. And manufactured homes absolutely count. They count as a unit for the tax credit. So how much is the credit? So let's talk real numbers. So for single family and manufactured homes that are Energy Star certified, it's up to $2,500 per unit. And if the unit is Energy Star and ZERH certified, it's up to $5,000 credit per unit. For multifamily buildings, it's for only Energy Star certified, it's $500 credit per unit. For Energy Star plus, if you have prevailing wages, it's up to $2,500 per unit. For multifamily ZERH, it's $1,000 per unit, and multifamily ZERH and prevailing wages is up to $5,000 per unit. So that's right. So for a multifamily building, you can get up to $5,000 credit per apartment unit if done correctly. So on a 100 unit building, that's a $500,000 tax credit, dollar for dollar reduction. So we mentioned this up here, prevailing wages. So what are the prevailing wage rules that apply to this? And this is where a lot of builders trip up. So for larger multifamily units, all laborers and subcontractors, everybody must be paid prevailing wages. So if you miss this requirement, the credit drops dramatically. So this is something you absolutely want coordinated before construction starts, not after. And to claim the credit, you need proper certification. You don't file the certification with your return, but you must retain it, in the event of an audit. In addition to the certification, the Energy Star or ZERH, what other records do you need to maintain? You need to maintain the home's address, that you were the eligible builder or producer, that the home was acquired during the tax year, who acquired it, and proof of prevailing wage compliance. So how would one go about claiming this credit? So builders and producers would claim this on IRS Form 8908, and this is something for your CPA or tax preparer to do. I wouldn't DIY this. If the entity is a partnership or S corporation, the credit flows through on the K1, and you would claim it on your Form 3800. The one thing is it would reduce your basis in the property, this credit that you get. But it's still pretty worthwhile. I mean, long-term, the net effect is still a big tax savings. So to summarize this and bring this all home, this is a powerful credit up to $5,000 per unit. The deadline is June 30, 2026, and that's a very firm deadline. It's not anticipated to be extended or anything. Homes must be sold or leased by then, not just under construction. So if you're a builder, developer, manufactured home producer, prefab, modular, one of these, you should be reviewing current projects, completion timeline, certification status, and wage compliance ASAP. If you need help planning this properly, I would talk to a CPA who understands construction and the energy credits. You can also always reach out to us. Our email and calendar booking link is down in the show notes. I hope you found this helpful and hope to see you in the next one.